Alright, what's up guys? This is X Factor here. I told you I'd give you a trade breakdown of the trade I posted on gold earlier today. Let's go right into it here. Pull up the 4-hour swing high to swing low. We had this fair value gap that was put in right down here on the close of this 6 a.m. candle, but it was in the discount of the swing high to swing low. So my thought process was we could get a little pump higher into the premium range, right into the next fair value gap, right at the bottom of this order block here, swing high to low. Going into the 1 p.m., we had a spike, that turtle soup, the 11 o'clock 1-hour candle that tapped into the H4 fair value gap. So I was monitoring price right in this area. After we spiked up from here, we created a 1-hour CRT. And if you go into the 1 o'clock hour here at 1:15, 15-minute candle closes above the 11:45 swing high, and it also closes above the 2 a.m. swing high here, right? So you got relative equal highs that get taken out. Closure above the highs, that's a turtle soup at the highs, which most retail traders are going to think this is a breakout, right? They're monitoring the range in here coming out of lunch, and they see the close above that, and they assume that this is going to be a breakout into the highs, comes up, comes down, and then continue higher. But we are not retail traders, and we know based on the way we take a look at liquidity that this is going to be a trap back down to the downside to rebalance price on the 1 hour. So the 1 hour rebalance is right here in this fair value gap in the internal range. You see the 15-minute candle right here at 1:15, turtle soup, the 1 o'clock candle. So you have a H1 CRT with a 15-minute CRT. If you go into the 5-minute, again, you got a thick candle closure above a recent swing high, right? And we put in a turtle soup of this high here. So now you have a 5-minute CRT before this downswing happens. So you have an H1 CRT, 15-minute CRT, and a 5-minute CRT going out of a higher time frame H4 fair value gap. And we zoom in even more here, and you see the 1-minute initial spike into the H4 here at 1 o'clock that took the high. I took my first short right at the close of this candle. And once I saw this 1-minute order block get put in, we inverted this fair value gap right in here, closed below. I had pretty good confidence that this order block is going to hold. If we broke above here, my stop was right above the fair value gap. If we closed above this order block, that is a failed setup. So I would have closed my trade fairly quickly. Short stops here, very small, very, very obvious failure in respecting a bearish PD array if we did close above this order block. The closure underneath the fair value gap gave me a lot more confidence. And we also put in a potential breaker right here. So once I saw this big candle come down, this swing low candle here becomes the breaker, if you will, or acting like a breaker. And once we respected that inverted fair value gap inside of the breaker, I added another position right in here, and I added another position right down in here to go back down to the bottom of the 1 hour 11 a.m. range. So you had multiple qualifiers here. You had your higher time frame fair value gap. You had the H1 CRT high taken. You had a 15-minute CRT set up. You had a 5-minute CRT at the high. Multiple order blocks, multiple entries. And if you wanted to even trade this for a 15-minute CRT play, you could have used this candle as your 15-minute CRT. Once the turtle souped into a higher time frame key level, you could have taken your short on the 5-minute or the 1-minute that I took. Even if you took a 5-minute entry here on the close of this swing high that took out this candle, closure beneath that order block, you could have came in on this right here with a high above the high, and then you got a 5.8 stop for, let's say, 11.2, right? Or 11.6. So you're getting a 2-to-1, and you'll hit that too. So, one contract on gold is $1,000 every 10 points. It's $100 a point. So if you find these trades, these setups, it's a quick $1,000. Keep your stops very tight. Failure of these are very obvious if you can learn to identify what is a true order block and what is not. So I highly recommend you take a look at this and take some images of this trade here, because these are the textbook setups that I love. I love these. They work very, very, very well. This is a textbook CRT. I know we traded the 50% here, but you have to keep in mind that when you're trading, I was looking at this around 11 a.m. and time trumps price. So I know during lunch it's low volatility. We're probably going to go sideways, and these zones will probably, and these swing highs will probably get retested, and liquidity will get taken out, because once we come out of lunch, around 1:30, volatility kicks in. They push price back up. They take out all the guys who went short here. They pump their stops out, and then they traders coming out of lunch. So there's your trade. Learn how to identify these entries. Use multiple CRTs. Identify multiple CRTs. Stack your PD arrays. This was a stacked PD array trade, and we pulled out 22 points on this. So we'll see what tomorrow brings. We're still in this range. We'll see if they want to hold this 50% and pump this higher into the premium of the overall range up here into this daily fair value gap before we head lower. But we'll see what happens. So that is the trade review. I hope that helps. And I'll see you on the next one.